So we are at a point in time where the overall NASDAQ ETF QQQ is making a huge reversal. A point in time where we're seeing stocks like Apple almost get close to reaching all-time highs. And then of course companies like Meta, where we have Mr. Mark Zuckerberg, almost make a massive reversal to the top as well. However, if we look at Tesla stock in the short term, things have not been looking too well. Now the problem here is that Wall Street oftentimes is very myopic, right? However, this presents a huge opportunity for individuals who could see the discrepancy between price and value in a company. So we recently saw Tesla stock tumble downwards, especially after the last earnings, where we saw that margins got slimmed down a bit, right? This was right after Tesla announced multiple price cuts on his vehicles, and Wall Street got the impression that Tesla stock was dying.
I think he's dying.
However, this is where we have to absolutely look a little bit more deeper into the fundamentals of the business for Tesla. You just have to do a little bit of simple math to really understand the true value that Tesla has. So in this video, I want to show you guys why I'm extremely bullish on Tesla in the long term. However, I want to also cover my views on Tesla in the short term as well. Now, when we look into the trends of EVs, we see that EV sales are growing exponentially, right? For example, in 2022, a total of 14% of all cars were electric, right? Back in 2021, it was only 9%. And back in 2020, it was only 5%. And before that, from 2017 to 2022, EV vehicles jumped from 1 million vehicles to 10 million vehicles. And then previously before that, we saw from 2012 to 2017, EV sales grew from 100,000 to 1 million. So we're seeing this multiple of 10x factoring in every single 5 years. Now, when we just look into who owns the market share for EV vehicles, we just have to look a little closely and see that Tesla owns over 65% of the market share for EV vehicles. However, the argument is, as we see more companies enter into the EV space, we're obviously going to see the market share for EV vehicles for Tesla decline over the years. And so that is what the bear case for Tesla is. However, I want to go ahead and explain to you guys that that is not the way you want to look into things, right? No. You want to look into things a little bit further than that. Because even though Tesla's EV market share will surely decline over the years as we have more companies entering into the EV space, one of the things we have to pay attention to is who is profitable in this EV market. So I want to go ahead and point you guys to this chart over here where we see that Tesla per vehicle has a net profit of $9,000 per vehicle, right? And then when we look at all the other companies, right, the margins are significantly lower. In fact, some of the EV vehicles in China are just at a negative profit margin, right? And we know that China owns a majority of the EV vehicles on this planet. Almost half of the EV cars are in China, yet their cars are unprofitable. However, when we take a look at Tesla's profit margins, they are at the top of the list, and that's not even factoring in FSD. See, in Elon Musk's last earnings call, he mentioned that even if Tesla wasn't even profitable at all at this very moment, because of the potential for FSD, they could nearly still beat the competition easily just because of the SaaS business model of having a monthly subscription to be able to have autonomy on their vehicles. Now, when it comes to the technology for Tesla, we know that Tesla is far beyond and superior than the competition. In fact, in the last earnings call, we heard Elon Musk mention that when it comes to FSD, they're getting about 1 million miles per day driven every single day. So that is way beyond the competition. In fact, Tesla surpassed 150 million miles driven with FSD beta. And so what this means is that this provides, Tesla with an abundance of real-time data that is just accelerating and getting much more better. See, that's the thing with AI. AI is very exponential, and when you have a scale, a massive amount of vehicles getting more data, well, this makes Tesla much more superior to the competition, even if they tried to get into autonomy. So although we're seeing Tesla at these low price levels, I believe that in the next 5 years, Tesla is going to be one of the greatest investments anyone could have in their long-term portfolio. However, when you look at things from a shorter duration of time, things aren't as optimistic. However, you have to look at things from a larger aggregation period. Now, Elon Musk himself recently tweeted that the Federal Reserve is making decisions based off data that has too much latency. Now, the reason that Elon Musk recently made this tweet is because we actually have a major meeting coming up in the next few days, which is the FOMC rate decision meeting, where we had the Federal Reserve, right, the members of the FOMC, decide whether or not they are going to hike interest rates, pause interest rates, or cut interest rates. Now, most likely it's looking like we're going to hike an additional, 25 basis points, which is why Elon Musk is kind of, tweeting this and being a little bit vocal, because of course, this causes us to really slow down the economy, which hurts Tesla stock in the short term, and it hurts the overall market in the short term. However, I'm someone that, obviously I trade Tesla in the short term, but I also invest in Tesla in the long term. And in my opinion, this is actually very bullish for Tesla in the long term. Now, the reason I say this is because even if we enter into a recession where we see companies like Tesla fall down due to, demand stifling, well, guess what? We're gonna see that happening to all the other, EV manufacturers, right? And so we're gonna see companies like Ford, who are already not profitable on EVs, lose even more money on EVs, right? We're gonna see a lot of these companies suffering, and companies like Tesla that have the pricing power to still, make it through, right? It's gonna be hard times because obviously revenues are going to go down, profits are going to go down, and investors in Wall Street are going to become more bearish in the short term if a recession does happen. However, Tesla will be able to long last, the recession due to their pricing power, and because they own the market share for EVs, they are going to be the EV company that survives. And guess what? Once they survive the storm that may come, this is going to, propel Tesla stock to levels that are far beyond the competition. Now, I myself don't have a crystal ball, and there are several other variables that could play into the effect of what happens to Tesla in the next couple of years. However, I just wanted to highlight that when we look a little bit deeper into the data, Tesla is actually much better positioned than a lot of the other EV companies. And so this is why I'm extremely bullish for the long term on Tesla, regardless of what happens in the short term. However, with that being said, I want you guys to let me know in the comment section below, what are your thoughts on Tesla stock, both in the short term and in the long term, and does Wall Street have Tesla stock wrong? I just want to give you guys a reminder, they have been wrong in the past before, and then perhaps they may be wrong again. However, I want you guys to let me know, but before you guys go, make sure to watch this next video right over here, and I'll see you guys on that next video. Take care, guys.